Good morning, everyone. Coming at you live on a Sunday morning. I want to recap my trades that I took this week and show you guys where I went wrong, what were my good trades, and hopefully give you guys some value this time. I do want to say at the beginning, if you haven't yet, go over to High Performance Trader and look at the most recently posted video, which is a weekly recap where we went over with the entire Discord team. We reviewed different trades that some of the members took, what they could have done better, reviewed our levels and the trades that we took. Some serious value in that video, and I believe it's a whole hour long. So there's tons of content you can get out of that. I highly recommend going to High Performance Trader YouTube and checking that out. That being said, let's get into the video. Right here, you can see I have our last week pulled up. Actually, this is the last 2 weeks, basically, and we have been trending in this up channel with some serious strength this last week. Right here is Monday, and I mean, we pulled back into a demand zone, and ever since then, we've just been absolutely massive buying pressure all the way up, blasting through supply zones. And one thing that I want to mention, which made itself known this week, is when you look at this upward trend, basically we have supply zones and we have demand zones. And when you get an upward trend, that means that the demand zones are being respected with a higher probability than the supply zones. That means supply zones are being broken more often than demand zones. And that is what we call market context. And it is very crucial when you're trading at the beginning of the day. You need to have that in mind. You need to know the market context. Obviously, it would have been a help to have this upward channel drawn, so you would have known in your mind to put less weight on supply zones and more weight on demand zones. Now, just because we're trending up and we haven't had a sell-off in a while is not reason enough to play the market short. And I learned that a couple times this week. We'll get into that. But if you're in an uptrend, you need to play with buyers. Do not try to predict that we're going to sell off at a certain level and just short at a supply zone. It might be reasonable to put on a position in a supply zone, but you need to stop out of that very quickly, have very quick stops when you're betting against the market like this week, which pretty much in general would have been a bad idea. I believe I did it once, but we'll get into it. So this right here, let's just zoom into a 5-minute. So this is our week right here. Over here on the left is Monday. Now, I did an interesting thing on Monday, which I've never really done before, but on Friday last week, I bent my rules in my trading plan, and I suffered a larger loss than I should have. It was only about 50%, but my rule is to stop out at 30%. Now, the only times that I ever feel pain when I'm trading is when I bend my rules and I have a losing trade. If I have a losing trade, but I followed all of my rules and stopped out at 30%, I don't usually feel anything because that's just part of the game. Losing is part of this game, and it's going to happen to everybody. But when you feel pain from the market is when you bend your rules and go past those rules that you've created for yourself. So that's what I did on Friday. And something that I've never done before is just decided to take the entire day off Monday. And I did this in a way to instill discipline and in a way, not a punishment for myself, but just take time to sit back and think about where my mind was and how I can improve in the market. And what do you know? Some beautiful setups showed up on the day that I chose not to trade, but that's exactly what I was trying to do. And I definitely learned from it. Now, this day, we saw a double top. This is pre-market high. Market tried to break the pre-market high and sold all the way off to a perfect end of day rejection. We love to see it. And this is actually a setup I took later on in the week. Another thing that you should note in this video is this cup and handle. This right here is a perfect cup and handle. Cup, and this would have been a perfect entry point. You can see buyers showed up right here at end of day. And again, and the last time we bounced off VWAP, which is very expected. Actually, now that I'm looking at it, it looks like almost a little break and retest from the left-hand side over here. Look at that. touch, break, retest, sell off. So that could be another little profit. But I want to go into my journal here. So this is what I'm talking about right here. This right here, like I said, I didn't make a move, but I looked on the options chart. This could have been a 140% move. If you bought from the very lowest wick to the very highest wick, it was about 200% move on in the money options. So that's just a little diagram of a cup and handle. Beautiful setup. I would take it again, 100%. Now, that was Monday. Tuesday, textbook end of day rejection. Now this is perfect right here. I should probably zoom in. Let's try the 1 minute. So you can see right here. Price came up. We even touched this end of day in pre-market several times. So I was looking for price to reject. I was looking for sellers in this area. Now I saw this initial sell right here. And I saw it came up again. Massive wick to the upside, getting very wicky. Looks like it touched end of day to the cent and then sold off. So let me show you where I made my trade. Right here, I picked the 396 strikes and I was targeting this demand zone below created in right at open. And I made 52% profits, which is good. And that was almost the whole move. Now, what I did with this trade is I did not just sell my position as soon as we touched this demand zone because I saw no valid confirmation to get out of this trade. And I think that's a very important point to make, is that do not just hop out of your trade as soon as we touch a demand zone. Wait for valid confirmation, or if you bust out of the bottom of your zone and you're going past your initial risk to reward ratio, then that would be a chance to exit your position, which is when I did, and very shortly after, we reversed. So you can see I had my demand zone here. We broke out of the bottom, and then we sold up. That was a beautiful move there. I'm telling you guys, end of day rejection is a beautiful setup. Look at your charts. You can actually download a Think script, which loads this blue end of day line on. That's what that is. It loads this blue end of day, or some people call it previous day close. But basically, it's the price that the last day closed at, and it acts as a very key level. And you'll see I take many trades off of this level, and it works with a surprising level of consistency. So that was Tuesday. Let's move on to Wednesday. So Wednesday. So let me go over Wednesday. I should probably zoom out to about a 5 minute. So we saw buying from the day before. What I was looking at this day was this level right here. And I'll tell you why. Lately, I have been absolutely slamming this break and retest strategy. So I showed it to you before on the day before. I think that was the Monday. But right here, you touch some selling coming in, break it, and when you touch again, buyers come in and bring you to the upside. So that's the trade that I make. Let's zoom in. And the key thing with this strategy is you're not always going to have valid confirmation. Sometimes with this strategy, you have to just pull the trigger, even if it's on a red candle. Keep your stops very tight and be ready to take your profits. In this case, it was not a large move, but I think it looks like I made 17% on scalps on this one. So this is how I journal all of my trades. You can see I've been referencing my OneNote, but this was the break and retest. You can see I actually went long on a red candle. And I think that's a very important point to make, is when you're trying to capture small scalps and you're trying to capture the biggest move in the market, you cannot always wait for valid confirmation. Now, this is my strategy. I know many other people say you have to wait for a 5 minute candle to show you which direction the market is going. That's fine for a larger day trading strategy. But what I'm doing here is just small scalping. And what works best for me in this strategy is to buy on the red candle or long on the red candle. And that allows me to maximize the entry and exit points and allow me to capture the largest move in the market. So what I did is I got long on this red candle right here at 933 when we came down to this retest level, and I rode the market all the way up. I initially saw this massive whack down here, this seller stepping into the market, which I actually assumed, because this always happens when you open exactly at the price that you open, there's probably going to be some sellers there. And there was, but buyers bought up so hard off of that break and retest level that I held until we broke that level again. And that's where I sold right there for a 17% scalp. Yes, I maybe could have held a little bit longer for a few more points. But if we look at my journal, that was my supply zone right there. The first little run up did not touch it, and the second one did, and that's where I exited my position. Those are just the rules I make for myself, and I made money. These are the base hits that I'm talking about. You need to be confident in hitting these base hits, not looking to make home runs here. We're in this game for long-term consistency. Okay, trade 2 went short, targeting demand with stop above the highs. So we ran up. I caught this little scalp. This looks like the 5-minute. We bounced off of demand, and I was expecting sellers to step back in at this level. That is right here. So this was our scalp in the beginning of the day, and I was targeting this demand zone here. My stop out was this supply zone up here, and I got stopped out. Luckily, I only lost 30%, which is that's my rule. I will have a hard stop at 30%. I like to stop out earlier if I can, but sometimes it doesn't work out like that. So just get this pulled up. I was looking to short right here and re-enter this demand zone. As you can see, that did not happen, and buyers bullied through the supply zone and brought price even higher. So I didn't make any more trades the rest of that's a lie. I did make one more trade, and that was off of this demand zone right here, and I'll show you in my journal right here. So trade number 3 on this day, another small scalp. I kind of beat myself up about this trade because I could have held it much longer. However, I knew there was supply here because I saw sharp sellers coming into the market, and this is where I just got stopped out. However, I put a trailing stop in for $8, which I realize is extremely tight, and I do recommend you guys to try this. I haven't done it a lot, but one of my buddies told me about it, and it actually works really well in taking the emotions out of exiting a position. Obviously, it takes a lot of perception to get in at exactly the right time, but getting out of your position, you can sometimes bend your rules. And if you have a trailing stop, basically what that does is allows you to it'll stop you out of your position when price retraces about $8, and you can set that to whatever you want. But in this case, I probably should have set it a little bit less. Price never actually hit my stop out, and I got out of my position. And as you can see, price rallied all the way up here at the end of the day. But this is the move that I made. This tiny little scalp right here. But the reason I did it is because I saw really strong buying pressure out of this demand zone, which I had marked on my charts. Break and retest. This was the break and retest level from the morning. Okay. So on to Thursday. So Thursday was another trade that I'm actually really proud of because I held even though the market was super choppy. Now you can see this green line right here is pre-market high. We broke pre-market high and sold off. Buyers could not hold above pre-market high. We knew there was sellers there, and that's a key thing to remember later on in the day when it came to this little retest right here, which is where I got short in the market, and I was targeting this demand zone down here. So this is where I got short, targeting this demand zone right here. Now, when you have this choppy action, it's going to be very tough to stay in your position because your contracts are going to be fluctuating by 20, 30 bucks at a time. And unless you have a very, very clear stop in your mind and you pick good strike prices, it's going to be very easy to get shooken out of this trade. So I ended up getting out of this trade early. I believe I saw buyers out of this level right here, and this is where I got out. I did not capture the full move. However, it was still a good move in my direction. And this is just not the type of action that I want to see on a high quality setup, which is why I wasn't willing to hold it longer. This right here would have been a perfect move. However, I believe it's always important to wait and let high quality setups show them to you, and present themselves in the market for you to take. So this is the short that I took, and I got out a little bit early. Was not in my stop, but like I said, I always like to see continuation after I get into my position, and these buyers coming in is not exactly what I wanted to see. So the main points that I wanted to make in this video is patience in waiting for your setups to make themselves known. Let the market paint its picture and do not rush your setups. I learned this on Monday when I took the day off trading. As I was watching the market, in my mind, I was thinking, okay, I'm going to go short here. But if I had actually played that out, I would have gotten burnt so many times. And that helped me immensely this week in my trading, not rushing trades, waiting for the market to approach the levels of interest that I had drawn out on my charts. End of day, break and retest level, supply, and demand zones. Those are the key levels that I always look for. And it's so important to wait for those levels to hit. And if they don't hit, I won't take a trade. That is crucial. You need to be able to only take high quality setups and only look for the highest probability setups. I hope that helped you guys. Like I said, go to High Performance Trader, watch the weekly recap. We broke down many of these trades. We broke down trades that we made on Friday. Very, very important stuff in there. Highly recommend you go watch it. But that's all I got for this one. Talk to you guys in the next one.